Imagine being able to own a piece of real estate without ever buying a house, dealing with tenants, or paying massive upfront costs. That's exactly what Fundrise promises, and today we're going to uncover whether this app is the future of real estate investing or just another overhyped idea. Fundrise works by letting you invest in real estate projects through something called e-REITs and e-funds. In simple words, instead of needing thousands to buy property, you can start with as little as $10 and still be part of large-scale commercial and residential real estate projects. This makes real estate more accessible than ever, and that's the reason so many new investors are curious about it. The app itself is designed for simplicity. You sign up, choose a plan that matches your goals, and Fundrise automatically spreads your money across different properties to balance risk and returns. For beginners, this can feel like a stress-free way to get into real estate without the overwhelming research or direct management that normally comes with it. Now, let's talk about the experience. On the positive side, Fundrise offers diversification, meaning you're not putting all your money into one property. It also pays out dividends quarterly, so you see cash flow without waiting years. Plus, their automatic portfolios make it easier to stay consistent, especially for busy professionals. Many users report steady, moderate returns that beat traditional savings accounts or bonds. But here's where you need to be careful. Real estate is not like the stock market. You can't cash out instantly. Fundrise investments can be illiquid, meaning if you need your money tomorrow, you may not be able to access it quickly. There are also fees to consider. While not outrageous, they are higher than some stock or ETF investing apps. Another point is performance depends heavily on the real estate market, so if the housing market struggles, your returns may dip as well. So, is Fundrise worth it in 2025? If you're looking for long-term growth, don't need immediate liquidity, and want to diversify outside of stocks, Fundrise could be a strong option. But if you want fast returns or total flexibility, it might feel restrictive. Think of Fundrise as a bridge. It connects everyday investors to opportunities that were once limited to the wealthy, but like any bridge, it has weight limits. Knowing whether it fits your personal goals is what truly matters. What do you think? Would you trust an app to build your real estate portfolio, or do you still prefer the traditional stock market path? Let me know your thoughts in the comments. And if you found this breakdown helpful, don't forget to hit like, subscribe, and tap the notification bell so you don't miss the next review.